Good afternoon. Bringing you a market update from Prime Ag on this Thursday, June 12th. Our herd in the country comes from Trago County in north central Kansas. About 10 days out from winter wheat harvest, we are optimistic on yield potential. Now, today we did have a USDA supply demand report, and I got to tell you, in my 30 years of covering the markets, this report might rank number one for the most uneventful. Sure, we got old crop exports increasing 50 million bushels, and therefore ending carryout decline slightly, but other than that, really no other significant changes. But now here onto this report. I mean, you got to remember when you first take a look at this report, there's three different outcomes in here. There's a bullish outcome, a neutral, or a bearish. The whole problem though is that, neutral tends to have more of a negative price trend. And so out of those three in here right now, 2 out of the 3 lean a bit more negative. We think that's what we saw here today because you just got to view these numbers as non-threatening. When we look ahead on the corn side of it, I mean, we can debate yield all we want in here. You got to stick with trend, especially looking at planting progress and crop ratings. It's just that the USDA's got a big demand forecast out there on exports of 2.675 billion bushels here on new crop. We think it's going to stay that high through the end of the year in here. I mean, Trump wants to say, hey, we're pro-ag, looking for exports, the art of the deal. But if anything long-term in here right now, that might be a bit optimistic. Over on the bean side, but really just nothing has changed in here. I mean, global carryout did increase 1 million metric ton as a raise that here on old crop, but overall just a pretty dull report. Now, when you get over to the wheat side of it, old crop carryout held unchanged at 841 million bushels. You got new crop carryout, though, is down slightly from May as the USDA bumped up exports. Now, that doesn't surprise us a lot as our current export pace is the strongest in 12 years to start the year. But we just thought that maybe production could have been bumped up higher with good May weather, but the USDA chose to leave it unchanged. Really no argument with that, though. Now, at the corn market here today, old crop July up 1.50 cents, new crop D's up 3/4 cents. I mean, same old with this report. Neither the bulls nor the bears get a lot of traction. I guess for us, is I think the bulls really were looking for a carryout on old crop corn below 1.3 billion bushels to support that July D spread and need for strong old crop basis. You just didn't get that. To me, the story then all just shifts out towards new crop. Our thinking on D's 435 is holding support, but we're going to struggle to get much above 460. Over on the soybean side of it, July down 8 cents, new crop November down 2 cents. Again, really nothing with the supply demand report. Weekly export sales were extremely poor, only 2 million bushels on both old and new crop. All the discussion here on beans is cash basis levels tanking here this week, dropping off more than 40 cents, and then occurring a bit earlier than normal. Bids have been moved from old crop July out against the November futures contract. It just seems to us end users are saying, look, we have enough old crop beans in here right now. We might as well base all of our bids off of new crop. We think this is going to lead to the widening of spreads at some point. We see carry moving into this market, whether it's July versus November or August against the November bean contract. There's just really no shortage in here of old crop beans. Now, getting to new crop November, we are holding support at 1020. Again, you question ourselves with non-threatening weather. Can we move back above 1050? That seems doubtful. Over on the wheat side of it, mixed trade. Chicago down 8 cents, KC 3 lower. You had Minneapolis up 4 cents. It seems like Minneapolis wants to hold a little more premium based off of weather in here right now. And then you have harvest really overhanging on the winter wheat contracts. The trade this week in Chicago wheat looks poor. We could trade to our lower end of our range. Long term, we think we're just still stuck $5 to $5.60. It's going to be important to get in the habit of selling the carry of the market when we do have bounces. Over in the cattle market, just mixed in here. June cattle were up 37 cents. August was a buck lower, mixed to mostly lower trade over in the feeder cattle side. Cash cattle is really breaking loose this week at 235, up about $5 from last week. Box beef values have jumped so far. Choice values up nearly $10. Now, the futures discount to the cash market continues to offer support in here as packers are chasing limited supply. Export sales were strong at 15,000 metric ton. Again, you do have bullish fundamental support. It's just a question of how long can this firmer cash trend really continue. A spread that has our attention is Deese April live cattle spread. Very seldom does Deese hold a premium to April. Currently, it's $2 above. Over in the hog market, quiet trade. You had July just up a nickel in here. The Deese contract, though, is a strong length. I mean, new contract highs again. And looking back in here, it's made new contract highs 18 out of the last 22 sessions. That's one of the quietest bull runs we have ever seen. Now, this is a good market in here. There's a few things that are sticking out. One is August's premium to the cash market. The other thing is as futures upside momentum is starting to slow this week. And then also today, export sales were extremely poor, less than 10,000 metric ton. Trend is still higher, but there's things that are starting to show up that we really have to be cautious with. You know, it might have been a slow report in here. Volatility is probably going to be sticking around. Again, this is all about weather. We'll keep you posted. Have a great evening.